one of the key attractions to Empress is that at this stage, you're already net cash positive, right? At an early stage, and you have 4 assets producing for you, and more in the pipeline that I want to talk about.
This is Jay Martin.
Alex, it's so good to finally get you here in the studio. Thanks for coming in.
Thank you so much for having me here. I am so excited to have this chat today.
Okay, me too. So the last time I saw you was in Florida at Rick Rule's Boca Raton conference, and I really wanted to catch you. It's wild. It's not a massive conference, but it's incredibly well produced. And I was like run off my feet busy the entire time. And I know we caught each other in the aisleway, and you were going this way, I was going that way, and we got a quick hug in, and then we ran other directions. But it struck me that being there for 4 days at a pretty tight event, and I still didn't get to connect with everybody that I wanted to talk to.
No, it's exactly that. I mean, there's 40, 50 companies there. The panelists are speaking are amazing. So you know, as having a booth, you want to be in listening. Thank God that's all in replay. So I'm slowly turning and going through those. Mm-hmm. But it's just amazing supportive shareholders we've had there. There's people we've met a couple years from going, and there's still, you know, very supportive shareholders. We've met new shareholders. It was, as you said, it was really busy. It was full of energy. It was a really great time to be there. Smart
investors asking great questions. Like the conversations on the floor were awesome. And it struck me that sentiment, in addition, right, sophisticated money is always nice, but the energy was in a great place. People were walking around with confidence in this bull market that I haven't seen in a long time. I think for the last few years, whenever we've had a bit of a, you know, maybe like a false start or a bit of a rally in the gold price, I'm at events or I'm hosting events and I'm talking to investors, and the most common term I would hear is we're feeling cautiously optimistic, right? And, you know, I don't want to get ahead of ourselves, but the feeling was definitely just optimistic. And that wasn't just the investors walking on the floor. That was the company CEOs, and that was everybody from the stage as well. It seemed like the trifecta. Everybody is experiencing this market a bit differently. And I wanted to ask you about that because if we look at how this precious metals bull market is unfolding, I would say it's incredibly textbook, right? A couple of years ago, the pillar idea, physical gold, began to run towards all-time highs, eventually hit them, and the capital has trickled down very methodically to sort of the best-in-class royalty companies, best-in-class miners, then mid-tier producers, and it's worked its way down the chain. So if you're an investor in gold mining companies, you're happy. But today, if you're a speculator in gold exploration developed companies, those people are still impatient because the money hasn't reached all the way down yet. I think that's healthy, but what's your take on this market, how it's unfolding? What are you paying attention to? I really appreciate your insight here because in a way, you and I do the same thing. We're capital allocators into the mining sector. You work with much bigger checks than I do, but we look at similar assets in terms of their stage. So how are you interpreting this market, Alex, and what are you paying attention to?
We've obviously followed it very closely. We're only gold and silver. And that was very done with very clear vision and to really be able to capitalize when the gold and silver market moves. I think all the fundamentals are there that we're in a proper bull market now. Especially now we're hitting all-time silver and gold highs. I think it's just going to continue. So, when I look at companies, it's, what gold can we get now? What silver can we get now? But as you're saying, as the environment's opening up more, and we believe there's more really long-term value coming here with all the effects of the geopolitical uncertainty, the meetings that are happening right now in China, the various crises around the world. You're looking at, the lack of confidence in some basic fundamentals like the SWIFT system with what happened there and the reserves starting to build it all up. There's a lot of shifts happening in that. And so we as a company we're really focused initially on producers, but now we're looking at development stage assets. I'm seeing a lot of restarts, people wanting to capitalize on gold now. So the market really is shifting and changing. And I think it's a very interesting time, and there's a lot of opportunity for investors.
Is like sort of just like broad sector, decreasing trust in the dollar, whether you're a foreign central bank or you're just a, gen pop walking around watching your purchasing power disintegrate. And I don't see any path forward that doesn't include massively increasing inflation of the currency.
Yeah.
And that's going to continue to pivot people. And I'm seeing more and more friends of mine who are not mining investors. And this is what's striking to me. The last couple of years, whenever there's been a rally in the gold price, and maybe even just a bit of a blip in the equities, most people don't care. And I would even argue today, I don't know, what's your take on this? Most people today still aren't paying attention. Gold miners are up twice what Nvidia's up year to date. But everyone's talking about Nvidia, which is great news if you're a gold investor, because there's a bit of a stealth rally occurring.
Mm-hmm.
Do you see it that way?
Yeah, I mean, you look at like Newmont, right? If you look at Newmont over the last year, S&P 500, it's up 100% over that. So you really are seeing those companies start shifting. I think general public as well, I'm starting to see friends who are wanting to understand the market. I think your Commodity TV is a fantastic, university is a fantastic platform for people to start educating themselves on our sector. Because there's so many different aspects to our sector. It's a lot for an investor to start to digest and to learn how they want to invest in the different stages of companies, the different commodities. But yeah, there's a lot of interesting things happening.
And are you seeing more institutions come to the table? Because you're on the road like more than anybody I know, every continent, right? Sitting down with financial institutions, telling the Empress story. So talk to me about that landscape.
Yeah, so we obviously do a lot of time with our retail investors, and we're seeing the institutions. I'm going to a conference in Colorado shortly, and at that conference, a couple years ago we'd have sort of 10 meetings, and now I'm getting fund managers, large fund managers reaching out to have contact, and we've got an absolutely packed schedule. So there's definitely a lot more interest, where I think perhaps they weren't looking such at the junior side of the market like we are as being a junior royalty company, but now those fund managers are definitely wanting to have the meetings to understand our story, to understand our growth platform.
Yeah. Okay. And what is it right now? Let's just get into the Empress story a little bit. I could nominate a few reasons that I believe institutions and retail will be more interested in Empress, right? Doubling revenue every year for 3 years, getting to cash quickly, being very specific with your deals. And I believe you've actually received some criticism from the market or shareholders about what I would call patience, but I guess people want you to do more deals than you're doing. I really respect the volume of deals that you look at and the infrequency with which you pull the trigger. And when you do, you mean it, right? But at a super high level right now, Empress has invested around $19.5 million, and you project to receive back about $50 million over 5 years in return.
Even higher than that. We've invested close to about 22. And
22.
Yeah. And so using not even current price, about 3,000 gold, $30 silver, that should be close to $80 million in revenue coming in over the next 5 years.
Right.
So,
okay.
We really set the company up to invest in assets that would bring revenue into Empress. And that's been our key focus, and tying it directly to gold and silver. So as gold and silver prices go up, the net asset value and the revenue come into Empress directly go up as well. We're very correlated.
So let's back up a minute and imagine someone has tuned in for the first time to the Empress story. What is it that Empress does? And walk me through the origin and structure of the company.
Okay, so essentially we are a royalty and streaming creation company, investing in gold and silver. And so breaking that down a little bit more. So royalty is where we invest in a company and we receive a percentage of revenue, cash essentially. And then a stream is where we invest in a company and we're able to buy gold or silver at a deeply discounted price. So we're basically pre-buying gold or silver and we're paying 20% of spot for that. So we get the 80% in return for it. And that typically is coming in gold and silver credits. And so right now we're sitting on a lot of cash, gold and silver. So we're seeing our actual treasury rise with the price of gold and silver as well. And at Empress, we do a combination of both. We mostly do streams because it's more of a project financing. We're directly investing into companies, helping them get into production or expand on their production capacity. So we really have de-risked the investment. They've got their permits in place. They're at that final stage where revenue will start coming in for them and for us. And it's also because we're directly investing into the company, we have a direct relationship with that company. I'm not waiting for their financial reports to come out quarterly. We have monthly reporting. We're able to understand what's happening with the companies, work with them, because we need them to be successful for us to be successful. In the portfolio right now, we have 4 revenue producing assets that we've layered in. Some were development. They're now in producing. So we have 4 sources of revenue. We have 1 silver stream in Mexico. That's roughly about 50% of our revenue. So where silver prices are now, that's going to even increase our revenue further from our forecasts. And then we've got 3 producing gold mines as well.
Okay.
One of the unique things about us as well is we're in Africa, we're in South America. And that really does come down from our background. And, you mentioned the origin story. My background as an investment banker, I was director of structured finance at a group called Endeavour Financial out of London. And Endeavour Financial is a leading boutique investment banking firm run by David Rhodes. And we worked together at Endeavour. And what we were seeing was the streaming companies like Wheaton and the larger ones were doing $100 million plus investment sizes. And this was 5 years ago when we set this company up.
Yes.
And that streaming finance solution wasn't available to the junior market. They were struggling with equity. Debt was more restrictive. So we can come in and either team up with those groups or we can come in solely and provide that financing for them.
Yeah.
So we saw the opportunity. We've been patiently deploying the capital we have without diluting our shareholders and letting that revenue now start accumulating so that we can redeploy it into the portfolio.
Okay. And so right now you have 4 producing assets. You're in Mozambique, you're in Peru, you're in South Africa, you're in Mexico.
Yes.
So globally diversified, and that's a consequence of your background with Endeavour Financial investment banking. You had a very global outlook,
Yes.
right? And your team does as well. You brought that team with you.
Yeah. And a lot of that's our experience. We've worked in these countries before. We know how to structure in these countries. We understand the legal framework. We understand how to take security over the assets. We understand how to get the money out of the country. So if our expertise and experience, and we have, contacts within the government and the experience to understand what's happening there so we can invest wisely.
And you mentioned your deal size relative to some more familiar names, the Wheatons, the Francos, doing the, 9-figure deals in the streaming and the royalty business. Empress is focused on around 10 million.
Yeah.
Correct?
We're mandated up to 25 million. We've started out, we've done sort of $5-10 million deal sizes. As we've now hit that critical point with the cash flow coming in, we'll start looking at larger investment opportunities, staying in that 25 range.
Okay.
So sort of 5 to 25 as well. I think you'll see us do most of the deals.
Okay.
And that's there's just lack of opportunity for financing for them. So it's a perfect time to get in.
Yeah, that's the piece of the market that you're cornering here. And so that's why I opened up this conversation. I was like, we kind of do the same thing in that we're vetting these projects and allocating capital in exchange for a return down the road. And we look at similar stage assets, right? Which is what I wanted to get into now. I have been asked many times by subscribers and attendees about Empress's deal size. And they've asked me, is the 10 million, the 5 to 10 million deal size the mandate, or is it a consequence of their company stage? And should we expect 5 years down the road for that deal size to increase? And if so, to what? And it's it's the mandate, right? You're mandated up to 25 million, but as a consequence of market conditions, you're now looking at larger deals than you've looked at for the last few years. Is that what I
we've
gather?
basically been in sort of 5 to 10 for the last couple of years. Now I'm, looking up towards a 25 range.
Yes.
As we evolve over the next 5 years, our cost of capital comes down. We've got a more diversified portfolio. We might get a little bit bigger than that, but we don't want something huge and lumpy in there. We really are focused on portfolio diversification.
Yes.
So I think you'll see us stay in this area because we can manage the risks that we're dealing with. Again, we're patiently deploying it, choosing the right assets, doing all the due diligence that supports it.
Okay.
But there's just a lot of opportunity in that size of the market.
So for somebody, again, who I want to simplify the model a little bit, we've discussed what it is you do and how you do it. To date, you've invested around 22 million. You said 22.5, 22? Yeah. And right now we have 4 producing assets. So what are those producing for us? What's the return from those assets that we're gaining annually at present?
Yeah. So we did, for the first half of this year, we did $6.5 million in revenue from those streaming investments. Net revenue is about 4.5. We're looking to double that. Revenue last year was $8 million. We'll be close to doubling it this year. And that will continue to grow out. We've got the asset in Peru. The Peruvian asset is actually a private company. We invested $10 million helping them expand their production from 750 tons to 1,000 tons. That was a couple of years ago. We've been receiving consistent revenue from them, and they're finishing off that expansion now and getting to a new part of the ore body. We did the Talahueto silver stream with Luca Mining. We got in pretty early on that one, and that one's obviously got into production now, and that one's moving forward. We're getting pure silver coming from that investment. We did Mozambique. That was a $3 million investment, and that was finishing off a plant. That one we invested was a development asset. It got into production. We've received over $5.5 $1.5 million US to date from that $3 million investment. Initially, there was a 3-year mine life plan. They've done extra development work. They're currently doing some exploration at the moment, and that is going to keep running even longer. So that's another example of how these things can run a lot longer when the work's being done around it. We did Galaxy in South Africa. That one's still ramping up now in production. So we're getting a small amount of gold now, but that will be part of the catalyst, as well as Luca for doubling our revenue this year.
Yes.
We're getting close to that, yeah.
Getting close to doubling revenue. And if you double revenue this year, that would be 4 years in a row, 3 years in a row?
4, yeah.
4 years in a row of doubling revenue year over year. And what's the income look like? Because right now you're building the treasury, correct?
Yeah, exactly. So we've got our net income. We're first, as of the June financials, we now have a positive cash flow, net income about $1.5 million US. Okay. We're able to keep our G&A low because we obviously have the relationship with Endeavor Financial. We're a lean team. Our G&A is about $2.5 million US. So the rest of that is pure profit that we can reinvest. We're sitting on about $4.5 million in cash, gold and silver at June, and we've been accumulating cash since then. So now we've got free cash flow, gold and silver, to reinvest in the portfolio. Yeah. And that's been a really critical point for us to hit, like a huge milestone, to now have the ability to act very quickly, to be more agile in the opportunities we're seeing and to seize them faster when they obviously make sense from the due diligence side.
Okay. And just one thing I want to point out there, because from a market cap standpoint, Empress would be in sort of the junior part of the industry, right? But what I like about it is that because of the model, you're an early stage royalty company, you're building the treasury right now. We were joking about this, but I call it the Vancouver M2 money supply. People don't think about, every gold and silver equity investor is familiar with the Fed printing money and devaluing their currency, and they think that's wrong. We all agree on that, right? But if a junior mining company does it, they don't bat an eye, right? And what can occur as a consequence of too much share issuance, going back to the market to raise money again and again and again too frequently, is you can have a junior company market cap go from 5 million up to 30 million, and the share price doesn't move because all they've done is issue more paper. And one of the key attractions to Empress is that at this stage, you're already net cash positive, right? At an early stage, when you have 4 assets producing for you, and more in the pipeline that I want to talk about. So, key reason number one, I suppose, to have a look at Empress right now is because some of the pillar companies that I encourage any mining investor to look at are the ones that you mentioned. It's the Wheatons, it's the Francos, and then maybe look at Agnico, really well-run companies, great leadership. They're the hallmarks of the industry, right? And if you follow that logic down from a business model standpoint to the early stage, there aren't a lot of companies that are doing what you're doing. I mean, you cornered this part of the market early. Question for you, actually, is there more competition in this deal size today? Like, are you seeing some copycat companies emerge who are looking at what you've built over the last few years and they're trying to do something comparable?
We are seeing other groups who've built their portfolios more on acquisitions or exploration, starting to look at the project finance side a little bit, which is interesting to see because they're realizing the returns we're getting and the cash flow basis that we're getting. Because if you're going to the side of the market we are, which is so close to production or in production, there's more opportunity there for the immediate cash. And I think the market has shifted generally in the royalty and streaming space over the last couple of years, where you were rewarded for long-term royalties or streams, but now I think people are being more rewarded for cash flow.
Yes.
And being able to redeploy exactly for that. Lack of, like, not having to dilute the shareholders, being able to be more strategic, actually getting, gold and silver coming into the account rather than potentially what might happen 10, 15 years down the road. So I think the market is rewarding that now. And so it's a bit of a shift in that. To me, that's great because that's bringing more finance to mining companies, right? There's more mines that will get more into production. So I think that's a very positive thing for our sector. We have a very much an expertise and a specialist in the jurisdictions we're going into. We're all structured finance backgrounds. So we work with these complex structures. We're even seeing the streaming agreements change over the last 5 years. It was very simple. You buy X% of gold and you get it. But now there's different milestones that go into it and different, I call them sort of levers that can be played with. And all the financing are very much more bespoke in streaming. A royalty agreement's a simple agreement. You produce, I get X%. Well, streaming agreement is much more complex. And because you're working directly with the mining company and understanding their goals and objectives, is this a simple development project that needs to get production? Do they have debt? Okay, well, there's certain things that the debt providers will need, so we can structure around that. Do they have the ability to raise equity? Okay, well, we can structure around that. Do they, they've got offtake financing and all these other elements, and we can work with the company understanding their goals to make sure that the streaming agreement really works for them. And we're still obviously getting a good return and works for our shareholders, but it has to work for both parties and their long-term goals. And a restart, it's different. Usually they've got a restart going and they want to get a bare minimum amount of gold coming out that they can use that financing themselves to expand the plant down the road. So, we can structure around that as well.
And you're seeing a bit of a surge in restarts. These are mines that maybe shut down, went on care and maintenance for the last 12 years because gold prices didn't support production. But now with gold prices where they're at, a lot of mines can be restarted. So you're seeing a surge. This is the trend you're watching.
Absolutely. I'm seeing an absolute surge in the restarts, and groups that maybe had some development assets or some exploration assets that have now realized there's a plant or a mill they can get their hands on. They can start pushing things through and actually use that cash flow to fund the bigger exploration that they wanted to do, but rather than just going out and raising equity and diluting. So that's, I think, been a shift I've seen in the last couple of months. And I think there's some really good companies out there making that shift right now and then trying to accumulate more land, but using their own, get themselves funded with our support and a few other support, and then they can really expand that. So that's going to be an interesting story, I think, to watch in the next couple of years, these kind of companies.
Okay. You did a deal last year in the US. So we talked about some assets you have in Mozambique, Peru, Mexico, and South Africa.
Yes.
Can we walk through the structure of this deal you did at the...
To be clear, we haven't actually closed that deal yet. We've been working that deal now for quite a while. So I'm looking forward to be able to come back. But, when we go through this process and working with these companies, there's extensive due diligence that we do. So actually, I'll just step back and even explain sort of our process and then so the elements that go into it. So, as you're an investor in the space, obviously we are as well. And so we're fortunate and positioned because we're dealing directly with a company and providing them usually substantial financing. We really get to get in there, go through all of their data, understand it. And it starts right out of the gate from the technical perspective. We have an amazing technical advisor, David Lang, who's been in the business for 40 years, involved with many companies. We worked together in Endeavor Financial. He was key over there, as still is. And so we go through, we look at the technical aspects, we identify if the project makes sense. If it does, we then will talk with the company, negotiate a term sheet. If we agree on terms, we then move forward with our third-party technical due diligence, which David Lang manages for us. We hire the right expert team in that jurisdiction with that mineralization, the geography. We might have identified areas early on that we think might be issues for them to dig deeper into and a real thing. So it's really kick the tires and see what this works. Site visits, extensive reporting. Often in that process, things fall off. They don't stack up. They don't meet the criteria at that point, or we'll make suggestions of what we think needs to be done. They can take it or leave it. Often, a couple of situations now, groups have gone away, done that additional work and come back to us. We do full extensive legal DD. So we look at all of their ESG reviews. We look at all of their permitting, their licenses, their social relations. A lot of these places are remote communities. So they have to be able to work within their community and have the support from the community, be able to provide jobs in an effective way and what other resources are needed in those environments. Obviously, full extensive financial review. We look at their contracts, make sure their offtake agreements make sense, make sure they've got a healthy enough balance sheet to be able to support what they want to do. Mm-hmm. If all of that stacks up, then it gets into the detailed legal negotiations and the final contract work that goes through. Sometimes that can be quick. Sometimes we identify an issue along the way that needs to be resolved before we can advance to actually be able to fund it. So we've been working a long time on this opportunity on a copper mine that's restarted in Utah, and we would be doing a gold and silver royalty on that. And then that's hopefully the next deal we can announce, but until it's done, it's not done. But we've got the cash on hand to fund it.
Okay.
So we still are just at 4 of the producing assets at the moment.
But that's a cool example of a restart project within that trend that you're watching, that you're now looking at. And, important to note that the quality of a royalty and or streaming company stands on the quality of the operators in their portfolio. And so the diligence process that you just outlined is critical. And I imagine having a partner like Endeavor Financial on the team really helps with that. You joked on my stage at VRIC last year, you're like, my job is to kill things quickly, And we see deals come in, and that should be every investor's goal, is to get to the no. Right? Yeah. Get the no's off your desk so you can find the yeses.
Exactly. And that is it. It's get the no's off the desk, and usually it's technical. We move them a little bit further forward and then something else comes out. But, it has to be the right investment. We're all large shareholders in this company. We want to see this company succeed. We're aligned with shareholders. So we are patiently deploying capital. And the market's shifting now, as there's more opportunity coming out, except with these restarts, and people really wanting to take advantage of the gold and silver price.
Okay. So Milford, one example, walk me through sort of the ideal deal that you're looking for right now. You're going up a little bit in terms of deal size. So what's appealing to Empress today?
So probably about $10 million. It would either be ideally it'd be a restart. So there would be a restart or development stage asset. For the last couple of years, I have really focused on producing assets. I did 2 developments, became producers, but I needed to get to the point where I had free cash flow. I needed to get net income. I needed these milestones to happen before I was willing to take the risk on development stage assets. So now that we've got stability in the portfolio, we're servicing our debt, we've got the $20 million available from Nabari, we're building up our treasury, I can look at development stage assets again. And that's exciting. So whether they're, development, meaning, development assets, but also restarts. So they can be 6 to 12 to 18 months from production because I can fund them without the heavy burdensome that we had before. So that's exciting. And there's some really good opportunities. There's ones, that are project financing where they've got most of the milestones in place. And then there's a gap again, kind of similar to what we did with Talaweto. That's, that would be a great one. And some of these restarts as well are really interesting.
And are you jurisdiction specific right now? Or you're just like, whatever looks good from the economic standpoint, we're moving on?
It's about economics, absolutely, for us.
And you got a BD team now focused on North America. You're looking to fill that role in Africa, but you're seeing deals there. Walk me through that structure a little bit. How do you scour the earth for the best deals?
Yeah, there's a lot of inbounds. There's a lot of opportunities we're seeing. So we were building the team out to be able to, and we've got obviously Endeavor helping us, building the team out to be able to vet more and bring more in. So we've brought in Mark Ashcroft out of Toronto. David and I knew him back from the Standard Bank and Barclays days. So he's a mining engineer by background. In Toronto, very well connected with the industry, runs several companies. So he's come on as our BD North America, and that really is helping expand the relationships we currently have, and it just solidifies them and builds on that. We're looking for someone for Africa, and we've got a good contact there that hopefully is the right person to come on as well. We've got some other feelers out, but it really is going for that sort of people who've been in senior roles, either in banks, running their own companies, who have that extensive network like we have that crosses with ours as well. So it creates more ability to have better relationships and be able to execute.
Is there enough opportunity for a company like Empress staying within this mandate? I guess, what is the opportunity for a company like Empress staying within this mandate? If you were to share with us like the BHAG vision down the road.
It is to repeat what we've done before. We focus on the producers, now want to layer in development assets. And so, because we get a little bit better returns in development assets, we're taking a little bit more risk to build it out to, 5, 6, 7, 8, 9, 10 investments in the portfolio.
Okay.
We've done to date just creation side. So that means directly investing in the companies, directly with them. We are seeing some portfolios that might be attractive to bring into the company. We're getting to that point where we've built the foundation. Now it's about accelerating that growth and getting the critical mass. And that's really what we're looking at, is some different strategic opportunities and some different ways of actually growing faster. I think we're finally starting to get the recognition of what we're capable of, and the financials are proving that. So it's now, okay, how do we get bigger? We can bring in the deals on, Mark, as I mentioned, is also a mining engineer. So we're expanding the technical side as well, and being able to execute on those.
Do you anticipate any M&A in the royalty space? Looking at the Royal Sandstorm deal, that was a huge deal. What's your take on M&A in the royalty and streaming sector?
Yeah, and you're seeing Tether, crypto groups coming into the space, which I think is really interesting because they want that hard asset backing with their Tether coin. You're seeing a lot of different things shifting in that space. I think we will finally start to see some consolidation. I think, there was a lot of talk about it, especially when we launched Empress. It was, a few companies, and there was a whole bunch of us that came out of the gate around the same time. Yeah. So I think that consolidation will start to happen and start to see that. I think probably more so now than ever before in our sector.
Okay.
But it'll depend on the different variables. Some of us are just pure gold and silver. There's other ones that have mixed commodity bases and different theories. But I think it comes down to cash flow.
And do you anticipate staying in that? We've seen some royalty companies begin gold and silver and then make the pivot to polymetallic over the years. It's not in the cards for Empress.
For Empress will be gold and silver. If we were to acquire something that had another metal in it, we would then probably sell that off. But
I see.
but for us, it's gold and silver. And we have, we've been,
I like that.
over the years, when it wasn't so in favor, everyone's saying, you should pick up this copper deal, you should look at this, you should look at that. And, we stayed true to it, believing where we believe gold and silver are going. And I think that's been demonstrated now, and we're going to stay true to that going forward. And when you look at the royalty sector as a whole and the trends in it, you're seeing the M&A starting to happen. You're seeing the precious metals, leading companies getting more recognition. You're seeing a lot more shift in the financial terms, as I was mentioning, on these contracts. They're getting more sophisticated. There's more bells and whistles added onto them to be more flexible for both sides. So there's definitely trends that are happening within our sector at the moment.
So for any prospective shareholders who are looking at Empress now and they're thinking about what can I expect to see from them, the next 6 to 12 months news flow, what would you tell them, Alex?
More deal flow. I would love to be able to execute on more deals. I am 100% focused on that. So that is key. I would love to, news flow will be the deal flow. It'll be our financial statements showing the revenue, showing we're being conservative with our spending, showing we've got the cash in the can, and growing it. So it really is me growing it, bringing people onto the team, building out our board.
Sounds like a business.
It's really rewarding to take something from concept and actually have the financials to prove it works. And then now just really trying to grow it out and build it out further. It's that critical point we finally hit where we have the freedom with the cash flow to be more agile and to be more aggressive.
To be more agile, more aggressive. You've continued to pick up celebrity shareholders along the way, right? Good to see you in Florida, right? In Boca Raton at Rick's event.
Very good shareholder base. And that's something that shifted. We've, over the last couple of years, we've brought in some amazing shareholders. We obviously have Rick Rule. We did that private placement with him. We've got Jeff Phillips. We've got Stephen Gleason, who runs one of the largest depositories in the US, one of the biggest bullion traders. We've got Sprott Maria from there, Frank Holmes, US Global. We've got obviously our key shareholders being and directors, Jeremy Bond from Terra Capital, David Rhodes from Endeavor Financial. So I feel very privileged for the supportive shareholders we have who are and yourself, such experts in the industry who really know the industry.
You know what's funny? I was just thinking about this as you were saying that. Everybody who works for me, I'm quite certain, is also a shareholder of Empress. The whole team. Yeah, independently. Like we don't co-invest, right? They do their own thing.
Yeah.
But as you were saying that, I was like, I think Empress would be definitely one of the top, if not the top companies mentioned on our VRIC media platform. Constantly coming up in conversation. We publish every day of the week on that channel. It's like a channel built by junior mining investors for junior mining investors. So we get into companies all the time. Empress is definitely one of the most mentioned companies, and maybe as a consequence or not, I'm pretty sure everybody that works for me is independently a shareholder of Empress as well.
That's amazing.
Feels good, right? Because we have a lot of new folks on our team that are new to the industry. And so you want to see them go to good homes with their money, right?
Yeah. When we were at Rick's conference, and also when I was at your conference in January, meeting shareholders there who invested early on, coming through where we're at now, and knowing there's such a huge potential for us to even, go so much higher if you're looking at the multiples in the sector of where we're trading now and what we're capable of doing and where we should be. So there's still so much torque left in this, especially because we're gold and silver, and where gold and silver are going.
I agree. And, and I say I agree because I've watched you do everything you said you were going to do since we connected and you took the company public 4 years ago, right?
Yeah, 4.5, yeah.
4.5 years ago. Yeah. You've continued to deliver on your promise to the shareholders and the market. Good market, bad market, be damned. You stayed true to the focus. Yeah. Every entrepreneur is seduced by fast cars and shiny objects. Maybe we should look at this copper project, right? You're not. You're saying we've got the vision. We know what we're best in the world at. We're going to stick to that. We've got the team to execute. Yeah. We're not going to get distracted and dilute the focus, right? It's the Achilles heel of entrepreneurship. Yeah. But it's important. It's very important.
It is. And yeah, we had a clear vision. We've been executing on that and really delivering on it. And there's just so much we can do now. So it really is exciting. Like there's just so much we can do. So it's going to be a really exciting, 6 to 12
I'm excited
months.
to see what you do with a good market.
Yeah, I know, right? Oh my goodness.
I see what you can do with a bad one. So, look, Alex, it's been so great to get you in the studio finally.
Thank you.
And just to share the journey as a shareholder over the last 4 years with Empress. And it's so nice bringing an entrepreneur back on the show again and again and again, because you just feel good about getting them in front of your audience when you know they're the kind of person who does what they say they're going to do.
Yeah.
Right. It's a rare attribute in this industry. So thank you for ticking that box.
Thank you so much. No, thank you for your support. Thank you for being a shareholder. You have been definitely along with me on this journey. It hasn't always been smooth, but we've always delivered and we've been consistent in that. And that's what we plan on doing going forward. And really now is the time to crank it up. So it's going to be fun.
Let's crank it up. I like it.
Awesome.
All right. Thank you, Alex.
Thank you so much, Jay.